Good morning, good afternoon, and good evening, depending on where you're seeing this video. Welcome back to the channel. My name is TRADEWITHBENIX. We are watching a recap of USDJPY. It's been a while since I dropped a video because I've been busy with some physical work, but nevertheless, let's get straight to the trade. So this is USDJPY. How did I frame these buyers and how did I get the trade? So I'm just going to delete everything. Let's start from the daily, or more or less the weekly. So first of all, it was a new week. Let's see. I think I took this trade on yes, it was on a Monday. So on the weekly, on the start of a new week, first of all, I saw that yes, we are bullish overall. If we change to the, you can see that we have the most recent break of structure to the upside, and also from here as well. Okay, we're expecting to take out these highs, but from here initially we had a break of structure to the upside, and we have been printing new structures, so we are bullish initially. And then again, I always do something for my buyers. I always do something that helps me. If you can see, I make use of CRT, alright, to frame my buyers. So as you can see, my CRT, I found the CRT candle. The low has been swept out, so I want the high to be taken out as well. You get, and there's every possibility that we can reverse from here, but that's just it's not hindsight, it's all in the same. So once the low has been taken, this candle is acting as liquidity. So once that candle has been taken out, I expect the highs to go out. Okay, that should be outstanding liquidity. So first of all, I came to the weekly. I figured out my CRT range. Low was taken, so I expect the high to be taken. Right. So I said basically we are starting from, this is the start of a new week. So I first of all saw that the open of this week was now rejecting from an open close. Okay, so what do? It's something we do every time. It's something that it's just the basic. Weekly reject weekly. What do we look for? Look for a change of character to the upside, or anywhere we are going, or a confirmation we get. So now on finding out that the weekly is rejecting from an open close, I want to look for confirmation. So I go down to my lower time frame. Now on coming to my lower time frame, this is that weekly candle that started the week Monday. I noticed something here. There are two things. First of all, if you switch to the higher time frame, you can see that there's a break of structure already. Yes, we can see that there's a break of structure to the upside already. Yes, this is the previous high. This was the previous low. Price was pushed up and broke above this high. So initially, what we want to do is know that yes, we're looking for highs. We're looking for buys. There's no, initially to every buy there's a sell, and to every sell there's a buy. So after price broke structure to the upside, what did I see? I see that we formed a CRT candle here again. See, it's just basic. These things will not be new to you if you practice, constant practice. So what is that now? We have our CRT candle, which is acting as liquidity for both sides. Once the other end of a CRT candle is taken out, we expect the other side to go, the highs to go. So rejecting from an open close that has been tested multiple times and respected. So that is a very good confluence. Now I do what? I go one time frame lower. It's the same thing you say. After a weekly rejection, we go one time frame lower to look for a change of character or a confirmation. Now on the same daily, after a daily rejection, you still want to go one time frame lower to look for that same confirmation. First, you want to go one time frame lower to look for the same confirmation. So going down, the ideal time frame to go from the daily is the 4 hour. Now on getting to the 4 hour, you can see there's a lot of things here. Let's just adjust our key level, and then we can adjust from here. We can bring it. You see, you can do this actually. This is both a CRT high. Do you see? They are both CRTs. You get? So they are both CRTs, but I think it's very confidential to do something like this instead. You can see, I see what. Now coming down to from the daily, we came down to the 4 hour. We did not find our break of structure that we're looking for exactly as we wanted, right? So what did we do? What did we see? We saw what? Another CRT forming. Now this is where you now say, okay, since we came from the weekly, we saw a CRT on the weekly, we moved to the daily, which is one time frame lower, to look for what? A break of structure. We did not see. Then instead, what did we see on the daily? We saw that on the daily we met another CRT. On the daily we move one time frame lower. Coming back to the 4 hour, we still saw there's no break of structure, but there's what? A CRT candle. Now where is that CRT candle? This is the candle. This one candle is the candle. So now what do? We still go one time frame lower. Now from this 4 hour, the ideal time frame to go from here should be the 1 hour. So go down to the 1 hour. What do we see exactly? Coming down, this is that CRT range. Let's just adjust our key level. Okay, this is that CRT range. If you're with me, see, this is where the CRT started from. So now coming back, we switch to your live time frame. After this candle, see this particular candle took out the CRT low. What do we have here? We had a what? A break of structure to the upside. Now this is what we have been looking for. From the weekly, we went to the daily to look for a break of structure. We did not. We note that down. From the daily, now we went to the 4 hour to look for a break of structure. We still did not see. Now coming down to the 4 hour, we went to the 1 hour. We finally saw what? A break of structure. Now this a model I always explain. There are different types of entries you can enter based on your confluence, but the number one and best entry model I always use that works always all the time, almost all the time, is what we call the ABC pattern. Now what's that? You have market moving downwards like this, and then finally we break structure to the upside. Now breaking structure to the upside will broke the most recent swing high, the previous swing high. You get? And breaking structure, what happens? Market retraces down like this. Now do you want to enter? No. All these retracements, you don't enter it. Now there's something I always say. Okay, you have to listen. All these things, they are not magical, they are just logical. You have to listen. I always say your entry, okay, pay attention, your entry is a factor of how deep your liquidity inducement is. I will say it one more time. Your entry is a factor of how deep your liquidity inducement is. So now your entry determines your inducement or liquidity determines your entry. It's something prior to whatever you're trading. Okay, when you're trading, your entry must have liquidity. It's a basic saying every time. You must have liquidity. If you can't find the liquidity, they say you are the liquidity. So once we have something like that, we have a first retracement. Price might start ranging like this, or price might even break up again like this. But don't fright. It's rather you lose the trade than to lose. It's rather you lose an entry than to lose a trade. It's more painful actually. So what happens? Now that price has created this will now act as our liquidity, or perhaps what we call inducement. Get? This will be our inducement. So this inducement now, where is the closest key level or entry for this? Now we have a V-shaped key level here. That is the closest as far as I am concerned. That is the closest to our entry. So your entry will be like this. Now normally, there are always wicks in a candle. So let this be the wick. Now what do I do? Some people always ask me, where do I put my stop loss? Now it is very essential that key level you are entering from. It is better to put your key level below, if you are looking for a buy, below the high, the low of the candle, the wick, right? If it's a buy, above it. So, and it is also something I always say, you don't need to keep your stop loss tight. You can give it space because the market can decide to stay weak above or below. So where are you targeting the CRT high? So price does what? First of all, we have a break of structure to the upside. Then second of all, we have our liquidity. Then third, we have our what? Entry. So price does this. price comes to this side, taking out all this inducement, and then finally does what? Start moving in the opposite direction. Get in your favor. So this is all what I use for my entry, my model. There are different models, but sticking with one is quite better for you. So let's get back to the charts. So after this break of structure, what did we say? We say we want to look for what? A retracement, right? That's good. So after the break of structure, price did what? Gave us that whole retracement. I could call this the whole retracement from year to year. This is the retracement. So from this place now, we want to see from this place, where is the most recent key levels? We have this. We have this. Okay, I think that's basically the only two we have. Is there any other one around there? Okay, yes, we still have, but I don't think you should be going that far. Okay, these key levels around here will do. So it's left for you. It all comes down to discretion. It's left for you to know whether to enter here. But initially, when you're entering here, your stop loss should just be below the low of, the candle you're entering off. Now, initially I entered from here, okay, because this is my entry model. I normally work with V shapes. It's left for you to have experience in the market. You do your research and know which key level market tends to trigger the most. Okay. Now, for me, some people say market doesn't come back to the V shape. Yeah, that's true, but some market conditions, market do come back. So it's left for you to do your research. So now, where will I be targeting? The CRT high. This is the first CRT high, and initially this is the other place. So I actually targeted here. It's more than enough. This is like a 1:18. Okay, initially what I did was my stop loss was just, I gave it space, so it was a 1:10. Now my RR are not just that much. My RR is a 1:7, but I mean, when you can use the opportunity, you can do it. So I targeted them, and that is how I was able to get the trade. Alright. So all you have to do is just put in the the work, practice, learn. There's one thing I always tell my students. I always tell them, if you are giving yourself a time every day for yourself to practice, you go further than anybody. You get? It's just something you have to put together. I keep saying it. These things are not magical. Okay, it's the same human being that has one brain as you that's doing the same thing. All you have to do is just practice. The difference is consistency. Okay, so thank you very much. Don't forget to like and subscribe. I hope I've been able to pass some knowledge based on this USDJPY recap. See you soon. Goodbye.